You know what? Good morning, everyone. My name is Jason Love, and I'm going to be your presenter here today. I had the button on mute, and no wonder nobody was replying to me. Just real quick, before we get started, can I make sure to get a quick sound check here from everybody today? You can hear me okay? Just type in the question box, sound is good, or yes, or something like that to let me know that you can hear me okay. Awesome. Hey, Reg, how are you? Recognize the name? Good. Excellent. Excellent. Thanks very much. Everyone, for your yeses here. Yeah, it's good to see you, Reg. All right, so I'm going to just real quick, I like to do this, and this gives some folks some time to get in here this morning. Where is everyone from? If you don't mind just dropping in where you're from, I like to kind of know where the audience is from, and like I said, it'll give us a minute here. Okay, Winnipeg, excellent. Las Vegas, perfect. UK, awesome. Sweden, Boston, Curacao, okay. Calgary, we also have UK, Colorado, Massachusetts, Ireland. Hey, Ireland, John. Blue Ridge, Georgia. Wow, Georgia's been in the news a lot here recently. Nova Scotia, very cool. Very cool. Frisco, Frisco, Texas. I'm in South Lake, Texas. There, Frisco. So we're neighbors. Utah, Estonia. Very cool. Very cool. Lots of folks in the area here. Very, very nice. All right. Detroit, Utah. Very cool. Well, we basically pretty well represented from all over the world, which I kind of expected here today. All right. So let's get started here. I'm going to present to you today. The title of my presentation is Market Maker Levels, the Secret Trading Levels of a Veteran Floor Trader. We'll talk about that here in just a minute. But I want to let you know that there's going to be no sales pitch at the end of this. I'm just going to talk to you about our market maker levels. I'm going to show you a few charts. I'm going to kind of explain some of the origins of that, and there will not be a sales pitch at the end of this. So if you are accustomed to coming to something like this and being pitched at the end, we won't do that here today. But I just really want to spend some time talking to you about some of the levels and things of that nature. Now, again, I go back to the title. The title of this is Market Maker Levels, the Secret Trading Levels of a Veteran Floor Trader. And I will be completely candid with you. I do not like it when someone starts out a presentation with magic or secret or super secret or those kinds of things. But I put that in the title of this really for one simple reason. The guy that taught me this was a veteran floor trader, and he was super secretive about the levels, and it became kind of the discussion point. It kind of became this running joke. Hey, where do the secret levels show you this or that today, right? And so while I don't like that marketing kind of gimmicky shtick very often, I included it in the title today because it really did have a place in our relationship before he finally broke down and showed me how to draw these levels. Now he's since moved on and no longer trading and retired and all those kinds of things. But initially when we got through or began this process together, they really were, as we jokingly referred to, super secret trading levels. All right, so let's get started here. So by way of a quick introduction, again, my name is Jason Love, and I'm the founder and lead trader here at the Oil Trading Group, and that is me graduating from high school in Odessa, Texas in 1987. And no, for those of you that are in Canada, we did not have a hockey team in Odessa, Texas in 1987. That's just the hair that I had. Shortly thereafter, I enlisted in the U.S. Navy. That's a picture of me all cleaned up, no hockey hair there to speak of. I am a combat veteran of Operation Desert Storm back in 91, and I held a top secret security clearance while in the Navy. And a few short 30 years later, that is me, founder and lead trader here at the Oil Trading Group. And we just recently, back in October of 2020, celebrated our 10-year anniversary of providing day trading education services online. Now, the big question that everybody asks in something like this is, okay, this guy that he's going to be showing me this stuff, how do I know it doesn't actually work, right? And so one of the things that we do in our trade room, and I'm going to spend some time talking about this. If you're not familiar with who Top Step Trader is, now Top Step, they are a prop firm that provides funding to traders who pass their trading criteria. So we do this a lot in our trade room in front of a live trading audience. We go through and conduct these trading combines and do this with people and in front of people, because one of the things that we've realized over the course of doing this for now 10 years is that a lot of traders come to us underfunded. And this is a really good program for a couple of reasons. And I'm not here to pitch Top Step today, but I do want to let you know, because I will be making some references here to it. The Top Step has a set of rules, and whether or not you actually want to trade their money or not, those rules, if you could adhere to those types of rules, the money management, the disciplines, the when you could trade, when you shouldn't trade, those kinds of things, if you can adhere to all of that, your personal account will be much healthier as a result of it. But if you are in that situation where you need some additional capital, this is a great place to go, because up to $5,000, you get to receive 100% of the funds. And then anything over that, it's an 80-20 split in your favor. And that's 80% of the reward with zero of the risk. So if you lost your trading account, they don't come back and ask you to give it back to them, right? That money back to them. You just lost it. You move on, and you try to go through it yet again. Anyway, the point of that is this is one of the ways that we go through, and I can show you whether or not this is actually a successful thing. And so going back into 2018, which is a couple of years ago at this point, I passed the step 1 and step 2 of the trading combine in the fastest possible time that you could do it in, and that was 15 trading days. And so this screenshot that you see here to the left was actually posted on Top Step Trader's website, and that was me that completed it in the fastest time possible. I did a webinar, and I'm going to share with you the YouTube channel here in a little while, but I did a webinar, and we talked in great detail about the process that I went through to get to that point. Now, one of the reasons why I'm showing you this, other than what I already mentioned, is I want to show you kind of how I use these levels. So this is, while not an all-encompassing view of the all of the trader combines that I have done in front of a live audience, it is a pretty good representation. So what I want you to draw your attention to is a couple of things here. Go down here where it says average winning trade. So over the course of all of these different combines, the average winning trade was $421. The average losing trade was $119. And that is a 3.5 to 1 reward to risk ratio, right? So that is an important number, and we're going to talk about why that's important here as we go through this process. I also want to show you that if you kind of back out this really long average winning trade duration here of 2 hours and 7 minutes, you can kind of get a sense here that the average winning trade is being held on for about 15 minutes, and the average losing trade somewhere between 4 to 5 minutes. So I'm holding on to the winning trades for about 3 to 4 times as long as I'm holding on to your losing trade. So in other words, I'm getting into a trade, it's not working, I get out. That's why the average losing trade is so low and the average winning trade is high, because I'm hanging on for these bigger targets. That I'm going to show you how I go through the process of determining where these bigger targets are. Now, in addition to that, I want you to look over here. It's not like I'm not losing, right? My largest losing day, you have some pretty decent sized losing days, right? But I was able to go through and hit the profit objectives on all of these different combines, despite the fact that you had these really big. You had some losing days, right? Some decent sized red numbers, right? That's trading, and that's what you look for here, right? And so, but the reason I can do this, the average losing trade here, is because I'm getting out quicker and I have these bigger, higher reward to risk ratios that I'm going to show you about when we talk about these levels. Now, in October of 2020, I went through this process of doing several trading combines here in front of a group of people. And so again, going back to October of 2020, you can kind of see that we went through, and this is the congratulations on passing the trading combine and reaching the funded level. So this was a sent by Top Step Trader to me on in the October of 2020 idea here, right? And so we're going to come back and talk about that here in a second. This is what it looked like though when we went from the 50K step 2 to the funded account, right? So we started this step 2 50K step 2 process on October 14th, and you can see down here that the days complete was 10 days. We had a winning day percentage of 80%, and I completed it on 10/17 here, right? And so again, this was 10 trading days with the profit here of 31.85, and you can kind of see all the green check marks that we have on the right side. Now, in addition to that, they give you an opportunity. So if you're not familiar with the process, you have once you go from step 2 to the funded account, you can go in one of two directions. And I'm not going to go through all the details here, but you can go into this pro account, or you can go into the funded, actual premium funded account. Without going through all the reasons why, the best course of action as a trader here is to go down that pro account. Once that pro account reaches a level of $5,000, they then transfer that money into your premium funded account, and you have a $5,000 balance to start with. And remember, anything up to $5,000 withdrawal is 100% yours at the end of the day. So this is what I showed you here was us going from step 2 to their pro funded account. Now, in the 50K pro account, once you get to that $5,000 level, you are then graduated, and that money is taken and put into that premium funded account. And you can see that we did that here in 4 days. We went from the 0 in the funded account in 4 trading days to the $5,000 premium funded account. And this was the letter here that I received for that. Congratulations, you're in the premium funded account. We will transfer your pro account balance up to $5,000 for futures to that account. So this was it here, and this was done on 11/5. That took a few weeks, and we've done some holiday. There was a holiday. We took 2 weeks off at the end of the year, so I didn't do a lot of trading in that account, but that is the way that worked. Now, in a parallel way, I also started the 150K trading combine, which has a $9,000 profit target. I started this in October of 2020, and it has a $9,000 5-day minimum requirement. So there's a profit objective of $9,000, and you have 5 days to achieve that. And again, you can see here, we completed this. We started this on the 16th. Days complete is 5, and we completed this on 10/22 of 20. Right. In fact, you needed to hit a $9,000 profit target. We actually ended up at a $13,200 profit objective in that step 1. Step 2, into the funded to the pro account. Again, same thing. You had 10 days to complete it. We completed it in the minimum amount of time of 10 trading days. So again, we went from completing it in the minimum amount of time of 15 trading days. And again, this time the profit objective was a little bit, or the profit achieved was a little bit over $12,300 in 10 trading days. And so what I'm showing you here is in one calendar month, there was over $36,900 in Top Step Trader accounts that went from step 1 to funded account status in one case. In another case, we went straight from step 2 to premium funded account in that window of time. I'm telling you that to say to you that all of this was done using the trading levels that I'm going to show you in here today. But beyond that, we had and I'm going to see if I can, we'll see if I can do this here. We'll see if I can zoom into this. I'm not going to be able to zoom in, it doesn't look like. Oh, here we go. Okay. So I don't know if you can read this or not, but we had a guy that joined our room in November. It says, "Thank you so much. I just registered. And what he meant was he just became a member of our trading group. See you in the trading room." And this is a quote right here that I have highlighted in red. "By the way, I passed the first step on phase 1 with Top Step with your trading methodology during my free trial over the past 4 days. If that wasn't worth every penny, I don't know what is. And then he sent me the screenshot of what he did during that window of time while he was just in on a free trial and was able to pass his step one. In fact, his profit target during that time, I think he was on the 50K account maybe. But anyway, he achieved a profit objective here. No, he was on the 100K, right? So he's at 106. He gets 61.96. Anyway, he achieved his profit objective during that window of time that he spent with us. Now, one last thing is not only has this methodology worked with Top Step Trader, we've also gone through Earn to Trade. And so I did a webinar, by the way. Earn to Trade approached us and said, hey, we would like to market to your folks and tell them about our product. And I'm all for, getting people funded and those kinds of things. So I said, sure. But the first thing I've got to be able to do is understand that you're going to do what you say you're going to do. And I want to go through the process before I kind of expose, my loyal customer base to your product. Also, at the time, they were fairly new, and so they did not have quite the track record that Top Step Trader had. Anyway, so I went through their entire process at Earn to Trade, and so we completed it, and they paid us $5,000 for the trading that we completed during that time. So in this webinar, I entitled it From Start to a $5,000 Deposit, trading in their gauntlet using the levels that we have that I'm going to show you here today. And just so you can see here, let's see if it'll let me zoom in one more time, right? You can see here that this was from Earn to Trade, and there was a $5,000 posted into our business account. So anyway, that's the way that went. And so I wanted to share that with you because the question always is, when you come into something like this, how do I know it works? How do I know it's going to work for me? Well, I don't know if it's going to work for you, but I can tell you it works for me, and I'm going to talk about what all this means. Now, you may be saying to yourself, geez, Jason, that's all well and good, but are you cherry picking things? And so I'm going to show you this. We have a YouTube channel right now here that I'm showing you that has over 500. We have over 500 videos of us taking these type of high reward to risk trades. Now, we had the holidays in here, and I haven't had a chance. I'm doing some really cool, exciting things coming up that I've been working on, so I really haven't had a chance to update a video in a while. But if you go to that link and you click on this channel, you're just going to see a wall, page after page after page of here's a $5,000 CL trade, here's a $2,250 CL trade, here's a $1,000 CL trade. And the way that and again, they just keep going and going, right? There's over 500. Here's that one video from how I passed step 1 to step 2. It's got over 22,000 views on it. That's one of the most popular ones. But again, you could go through here, and the way that I kind of present the information to you is I show you exactly where I get in front of the live audience. So I got into this trade in front of a live audience, and then I let you see where I got in, where the stop was, how many lots being traded. And then the trades, they last 20, 25 minutes. So I usually cut them up into pieces, speed it up, put some music behind it so you can kind of get the gist, and then you get to see where it is that I exited. But these videos, I go through and kind of tell you, look, I got in here and here's why. And then I cut to the exact place on the where I recorded it from the live trade room where I'm saying I'm going short at, and you see the order appear, and then you see me get filled, and then you see me manage the trade as we go through it. So again, not just cherry picking, but there's 500 plus videos here of us going and doing that exact thing that I'm about to show you here today. All right. So with all that being said, we got to get the legal stuff out of the way here. So the U.S. government wants you to know that the Commodities Future Trading Commission, that's the body that regulates us here, has determined that there are large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the futures and options markets. Also, you should seek appropriate advice from your broker or licensed investment advisor before taking any action. Past performance does not guarantee future results. The Oil Trading Group, that's us. We do not hold ourselves out as commodity trading advisors. So given this representation, all information and material provided by us to you is for educational purposes only and should not be considered specific investment advice. And then, of course, as with all hypothetical or simulated performance results, they have certain limitations, and unlike actual performance record. Now, again, you want to go to our website. You want to click on the legal disclaimers so that you can get a full sense of all of the legal stuff that is required of you to understand before you start trading. So let's talk about what a market maker is. So one of the things, the title of this presentation today is Market Maker Levels, right? The secret levels of a veteran floor trader. Well, what is a market maker? We hear that term thrown around quite a bit. So in its most basic terms, instruments markets need a pool of buyers and sellers in order to move the exchanges. So markets are high volume traders, makers were high volume traders that literally made the market, right? They are always in the ready. So you have that bid-ask spread, and it could be really large if you didn't have all of these market makers and retail players in the middle. They're providing liquidity to the market. Market makers would profit on the bid-ask spread, again, like we just talked about, and they benefited the market. They benefit the market by adding liquidity to the market. Now, this is a picture here on the left of Patrick. Patrick was the veteran floor trader that I was telling you about, and this is him in one of his dynamic poses here. Again, the floor trader was an exchange member who executed transactions from the floor of the exchange. These traders fulfilled back in the day an important role in commodity and stock markets by providing liquidity, which we just talked about. And again, they were also referred to as market makers. Now, again, we talked about these levels were developed by my trading mentor, a guy who traded on the floor of the S&P pits for 30 years. He did other places, but primarily he spent time on the floor of the S&P. In their original form, these levels were calculated by hand, and that's really the way that I learned them. And at some point, if you're interested in these levels, that's the same process that I'll teach you, is how to draw them by hand first before we start talking about indicators. And the reason that we do that is the same reason why your math teacher in elementary school, why did they do that? Well, they wanted you to understand the whys behind the what before you really dug into it. And that's the same thing that I did, right? So they were originally developed by hand by Patrick, this floor trader, and then he taught me how to draw them by hand as well. And so despite the changes in the way trading is conducted today, electronically versus being on the floor, the logic for these levels continue to work in today's trading environment. Now, what are the market maker levels? As you know, the market is continuously telling a story. The story provides context for the daily trading session, right? So when you sit down every morning and you start your analysis and you're looking at a higher time frame, and then you start drilling it down into the smaller, more tradable time frames, you are looking at the market and the story that the market is trying to tell you. Well, the market maker levels are the structure points inside the daily story, right? So if you say, look, this is the book, and this is the book that I want to read, and this is the story the book is about. Well, the market maker levels are the chapters within the book. They are the structure points within the book. And so once determined, these structure points are used as tactical areas to make trading decisions, entry, stops, and target locations, right? So in and of themselves, they're not necessarily an entry and exit signal. Although when I show you some charts today and I start going through a few examples, you can certainly use them that way, but they are more tactical locations, right? Places on the chart where you want to look to make a decision. Why do these levels work, right? Well, you don't really, in order to effectively use them, you don't need to necessarily know why they work. Like when you get behind the wheel of your car, you put the key in, you step on the gas, and the vast majority of the people can't tell you the internal workings of the combustion engine, right? They just know it works. But I will tell you why these levels work, right? The markets, as you know, don't move linearly in nature. The markets rally, they pull back. The markets will pull back, and then they will rally. That's really being evidenced here on this profile chart, right? Market starts, moves down, and then it rallies, and then it pulls back, and then it rallies, and then it pulls back, and then it rallies. That's the natural ebb and flow. Now, this is a profile chart on a daily basis, and so this is what a daily kind of profiles look like. But you can see those same types of ebbs and flows on a day in and day out basis, right? So what is happening, and as you know, statistics will show you that the market will be non-trending greater than 80% of the time, and depending on what statistic you look at, you could see it as high as 90% of the time that the market is non-trending. But what's happening on these rallies and pullbacks that the market goes through naturally, they're creating a set of measurements, right? And it is inside of those rotations that these measurements are created. And so here's why they work, right? In order to fully understand why the market rotates, you must understand the auction process and how markets go about discovering what the fair prices are in any given day. And so, depending on who you study, Jim Dalton, Stottlemyre, on profile, they talk a lot about value, right? And in any market, there's value. So if you're going to go sell real estate, well, how do you determine what the price of real estate is? Well, you go to determine the price of real estate by looking at all the comparable properties in a neighborhood, right? So those properties at the high end and those properties at the low end, and you kind of put them all together and say, well, they have 3,000 square feet. I've got 2,800. They've got a swimming pool. I don't. All these different variables go in to kind of establish a value range, right? But let's assume for a minute that there is a deposit of oil that is found underneath this subdivision. Well, all of a sudden, the market is going to rally until it finds people that say, okay, it's not worth buying anymore, because we've reached such a price that even with all of this newfound wealth underneath our property, it's not worth buying up here anymore. And then that's when the selling takes over. Conversely, if they found, let's say they found that the groundwater underneath these properties had been tainted, right? Well, all of a sudden, the market, the value of these properties are going to drop dramatically until they say, okay, the buyers step up and say, you know what, this is a really good buy. Now I can remediate the issues with the groundwater, and now this property is a good value. I'm just going to wait it out for a couple of years, and the market will start to rally again. That's what these markets all do, right? So it's a two-way auction process where the market is rallying until it finds people who say, okay, that's probably too high. Let me start selling, and then it'll sell off until the buyers step in and say that's a really good deal. So again, remember this, the market moves from horizontal development to vertical development back to horizontal development, meaning that it's going to go sideways to trend and trend back to sideways and sideways to trend and trend back to sideways. The sole purpose of the market is price discovery. The market will rotate within a range of prices until a variable changes, like yesterday, right? There was a political issue that went on here in the U.S. with folks storming the Capitol. Well, during that time, that's a variable that changed, and the market that had been rallying all day suddenly sold off because of this new variable. Well, the reason that the market maker levels work is because these rotations create a set of measurements that are based upon time and price cycles from previous trading sessions, right? And so these measurements are then projected forward into the next day's trading session. So it is market-generated information based on time and price, and these rotations are information presented by the market and then are projected forward. So it's very much real-time, kind of projected forward stuff from previous types of rotations. That's why they work, right? It's market-generated information, and it's giving you based on what the market is doing at that moment, right? All right. So what I want to caution you against is that these are not floor trader pivots. And so while they were developed by a floor trader, they are not floor trader pivots. Here's what the floor trader pivots are, and you can go find this just about anywhere on the internet. They are calculations based on averages of high, low, close. So that kind of center line, that center pivot, or what's called the pivot point, is the high plus the low plus the close divided by 3. And then built off of that, you have resistant levels 1, 2, and 3. And then built off of that below, you have support levels 1, 2, and 3. Now, these measurements are basic in nature and do not take into consideration changes in market and price volatility or range expansion as it is occurring in real time. So in other words, you have about 6-7 levels on your chart. They were done based on previous price action, high-low closes, and some variation of that, and that's where you get these support resistance levels that are known as floor trader pivots. By the way, I'm explaining this to you because I get asked this all the time. Why don't I just use floor trader pivots? The market maker level calculations are based upon time and price action. And so because of the time calculation that is involved, these levels evolve in real time to account for the changes in rotation and price discovery. So when you have the RTH session close, like we'll have here in a couple of hours on the CL, the next day's overnight levels will print, and then they'll run all night. And then at the RTH session open, the next set of levels, the RTH levels, will print, and they'll be valid through the RTH session. And then at intervals throughout the day, you're going to get another set of levels that are called intraday levels. Now, I don't use them very often unless the market has just expanded way beyond, right? But they are there in case the market goes on some, what's the term? Parabolic move, right? So if the market's going to go on a parabolic move, then you need some market-generated information to assist you and give you these new levels. Now, one of the coolest things about these levels is we're at all-time highs here on the ES. Well, these levels, because of the measurements, will give you targets and ideas above the market where traditional support and resistance ideas won't work. There are some tools out there like an Andrews pitchfork or some Fibonacci time cycles, but these are going to give you on an everyday basis targets and objectives above the market, even though we are making new all-time highs. All right, so here's some final thoughts here before we go. These levels will, before we start looking at chart stuff, these levels will continue to work because trading is based upon human emotion and groupthink. These levels take advantage of the process of continuous price discovery and provide structure for the daily trading sessions. So I'm going to show you some chart examples. We're only going to focus on the two types of levels here. We're going to focus on the ETH levels, or extended trading hours, also known as the Globex hours, and the RTH levels, which are the regular trading hours, also known as the pit session. These extended trading hours start at the close of the RTH session, so 1:30 on the CL, 3:15 on the ES, and they begin and they will provide you with that structure in your overnight session. And the RTH levels form up at the beginning of the next trading day's RTH session and end at the RTH session level is there. All right, so before I start going through the chart examples, which is one of the things that we all want to look at, I see a couple of questions coming in. One of the questions is there an objective method here or simply the levels to look at? And is there an objective, let me see here, I want to make sure I'm reading this. Is there an objective method? Okay, I'm going to answer your question, and I'm going to try not to have a sharp point on it, okay? So I'm not going to mean to have a sharp point if it sounds like that I am. Every time you sit down and you open your computer and you're pulling the trigger, there's nothing objective about it. It is a subjective approach to trading. So these levels are giving you an objective location on the chart to which you have to use your subjectivity to pull the trigger. Here's what I mean. If you have a particular setup that you like to use, right? I want to use a bearish engulfing candle above 2 moving averages, and once that bearish engulfing candle is there, I want to get in long at the next idea. Well, there's a set of rules there that you can follow. But the moment that you stop saying, you know what, I just didn't feel right, I don't like the liquidity, I don't like the volume, I don't like the news, you're adding your subjectivity. So again, I'm not trying to be difficult in answering your question. These levels provide an objective way and location to enter into the trade, right? An objective location. Now, I'm going to show you here when we start doing some charts how you could just take every single one of these opportunities that come down the road, and because you have a 3-to-1 reward to risk ratio and that kind of thing, let me show you. This will be a better, let me just show you here. We'll start by looking at the CL here, right? Let's take a look at the CL chart. All right, so this is your CL chart here from today's trading session right here, okay? So what you're looking at here are the RTH session levels. The market opens up and it gets to within, let's see, this was down here at 38 and this was here at 43 was the low. So within 5 ticks, right? So you say, look, the market's coming in here, market pulls back through it, and there really wasn't an opportunity into this level. But you said, look, I'm going to take this as we get up here closer to this RTH signal. Really not an opportunity here, but I'm going to look to take this straight up here. This is right at the open. This would be a little bit difficult to try to do unless you drew them in advance and you said you wanted to do this. But now you've had from here at 8 o'clock to, let's see, 10:35. You've had 2.5 hours of watching the market go in this sloppy nature. And you said to yourself, I'm going to enter at this place. This is where I'm going to enter. Now, there are 2 ways to look at this. You can wait for to the tick precision, hit the level, and enter when it hits the level exactly. Or you can front run the levels, and that's what I've drawn here, is the zone of influence around this support resistance idea. Let me say this. If you wait for to the tick precision, you will participate in every single loser that the trade has. If you say this differently, if you wait for to the tick precision, you will participate in every losing trade that comes down the road, and you will miss some of the winning trades, right? So just understand that on any support resistance idea, that the minute you wait for this up here, you will participate in every single losing trade. But if you don't get in here, and I'm not advocating one way or the other, but if you don't get in here, you would not have gotten this winner, right? So let's do this. Let's take this drawing here, and we're just going to go backwards here. I'm not going to pick and choose here, right? So let's say you entered right there, okay? This gave you 7 ticks of heat, and this went as deep as 39 ticks. So if you had your stop at 10 and you want a 2.5-to-1 reward to risk ratio, that gave it to you, right? And that would have been your only opportunity today. If you waited for to the tick precision, which you can, you would have had no opportunities on the CL today because the CL has been chopping around in a pretty kind of ugly range here, right? So let's look at this. Let's look at this trade here. This was inventory day. So we're going to wait to after inventory day here, okay? And so let's say you waited for this to come up for to the tick precision, and then you on the break back down through the bottom of this zone. And again, I'm not advocating a system. I'm just showing you kind of the way. There's 20 ticks there. So you got a 10 tick stop on the break here. There was a 2-to-1 reward to risk ratio. Maybe you got taken out at break even. This time, right, you waited for to the tick precision, right? You waited for to the tick precision, and you took your stop is above the zone here, and you took a 10 or 11 tick stop. Comes back up, and you said, look, I'm not going to do this. I'm going to wait for to the tick precision. Well, this time you got to the tick precision, and you had an opportunity for 45 ticks, which at this point, if you were saying, look, I'm to the tick precision, I'm going to get short. Well, this short called that big sell-off at the end of the day, and that was 146 ticks, right? And so, again, I'm not adding any qualification to it. I'm just showing you how the levels work. What I have found out over the years, 10 years of running a trade room, is that by the time you get to me, and today there are over 150 people watching here today, what I have found out over the course of time in dealing with traders is that I'm not the first person they've ever come to, right? They have bought a book, a program, watched a video, and by the time they get to me, they have been to a number of different places. In fact, the average trader is buying 5 to 7 programs in the lifetime of their trading system. Some are buying more, some are buying a few less, but it's an average of 5 to 7 times. And so let's say you bought a book and you read this book and they gave you a setup and you didn't like anything else about the book, but you like this one particular setup. You took that and you put it in your toolbox, and then you moved on. And then you bought the ABC trading indicator and you put it on your chart, and it didn't work all the time, but the only time I really found that it worked is when it was in this particular unique situation. And then you took that tool and you put it in your toolbox and you moved on. And so by the time you got to me, most traders are really lacking in reward to risk and learning how to hold on and knowing where to target and those kinds of things. That's where something like this becomes super beneficial to you, right? So here's a couple of different opportunities here. You had a 111 here. You had a 11 tick loser here. Sorry, we waited till after the inventory. You had a break-even trade here. You had an 11 tick loser here. You waited for this to come down here. You had a 45 tick winner, and then whatever you wanted to take at the end of this when that news broke yesterday, right? Whatever you wanted to take off of that's 146 ticks. So you had a losing trade for an 11 tick loser, and if all you got was this trade here because you're waiting for 2 to tick precision, that's 45 ticks. That's 4.5 to 1 reward to risk ratio. And you said, look, it's too close to the close. I'm not going to do this. Well, you could have, and they gave you an opportunity. But even if you back that one out, you're up 45 ticks, you're down 11, you're on 3 trades with a break even mixed in, and all of a sudden you've got a 4.5 to 1 reward. You ended up the day with 4.5 to 1 reward to risk ratio. Here's another day, right? Here's another day where you look at this opportunity, right? The market comes down through, and let's see here. Let's just kind of pull these here, right here, so you can kind of see this, okay? So you could not quite come down to the level here, and this is a trending day, right? This is a pretty aggressive trending day. And so what I would probably encourage you to do here on something like this, let's just do this, right? So you had a trend line here, right? You had a trend line here, and you had a break here of a high, right? And so you said, okay, well, we broke through this trend line. We couldn't make it to the level below. I'm not sure. We're right back in the middle here. Maybe I could get short up here, but that's really not against the level, right? And you said, okay, I'm going to break out here, right? I'm just giving you, just kind of giving you some ideas here, right? So let's take a ruler. And you said, I'm going to get in on the open of this next bar, and I'm going to have a 10 tick stop, and there's 34 ticks to that next level. But you said, look, this is really aggressive, and there's really been nothing showing me that's going to be slowing down. So you ride it to the next level above, and that's 56 ticks. So you've got a 90 tick worth of spread here, just simply putting a few chart patterns on your chart. So I'm going to go through one more of these here on the CL, and then we can kind of go from here. All right, so here the market is rally, rally, rally. You open up right against your RTH session mid, right? And we're not using anything other than we're just tagging the level, right? And so you bring this here. Whoops, I don't want that. I want ruler, right? And so let's say you get in here, and this is, you would have had a 10 tick stop that took you out of 12 ticks, but the market immediately closes back. And you say, look, we could not get to the level again. This is still valid. This time I'm going to take it on the break of this level. And the market gives you an opportunity for 59 ticks. So you took an 11 tick stop, you got a 59 tick target. That's 5, almost 6 to 1 reward to risk ratio. And let's say you wanted to take it here and you get slammed out here for 11 ticks, right? You try to take the long on the way back. You said, I'm going to try it again long, and you got slammed. And so even if you get chopped around in this the rest of the day, here's the key number. You got 60 ticks here and you lost 11. That's 50 ticks a lot, right? About 50 ticks a lot. On 2 lots, you made $1,000. Are you done on the day? Well, if you're not, if you started here, right, then you may have had a challenge. But again, this is without anything, right? This is without any tool or assistance around you in terms of looking at ideas. And we have different ways and ideas to get in, right? But I'm just showing you how the levels work here as you kind of walk through the process, right? So again, there is a structure point formation. You say, look, am I really going to want to get long here? Maybe, right? And so maybe you did get long there. And if I were to break this down to a 1 minute chart, we might find that this was enough here, comes down, tags the level, rallies back up there. There's 14 ticks. That's enough to get you to break even, and that's what we would do, right? And so again, there's just opportunities here. So let's take a look at another chart. Let's take a look here at the ES chart. And I'm going to turn off the day levels here. We're just going to look at the overnight levels. And this is a trade that I took in our trade room today for a $1,000 ES trade. I was down ticks on the day, but I took a $1,000 ES trade off of this information that I'm about to show you here, right? And so the market opens up after the open, right down underneath this level, right? Market comes in here. I got hit but no fill at I got hit but no fill at I got hit but no fill in this area right here. Okay, so give me a second here. I'm gonna turn on these day levels so you can see where I was looking at. We were just above this RTH target here, right? And I was trying to get in right in this area to ride this thing up. Ended up having to get in a little bit higher. But if you just look at your overnight level structure points here, right? Market opens here. The market opens here on the ETH signal, rotates here, and then goes all the way up into the ETH target, and that is 36 ES points. And look at this, nailed it dead to the tick right up here. Now, these are all-time highs again on the ES, and if you'll notice here as we go through it, you'll notice that there would be no history going back to the left of the chart here. There would be no history back here to benchmark this off of. So these measurements and rotations gave you an excellent targeting location and really an excellent place to look to get short. If you were looking at to the tick precision, you had a 2.5 point stop above this box here, then the opportunity here so far today has been 15 ES points right off of this. And I would be looking to target to this level down below, right? I'd be looking to target either here or somewhere down in this level. But that's 15 points to target, and that's on an all-time high where there's really nothing else back here in space, right? Just the measurements off of these levels. So let's take a look here, right? Market opens here right on this ETH signal, and just like I said to you before, if you took the stop here, right? If you jumped on right here, okay, and you took this stop, you'd be 2.5 points on the stop. Market could not get down below, breaks into, right? Breaks up and over the top of this. And if you said, look, I'm just gonna wait for it to clear this high here and I'm gonna get in, okay? First thing I would say to myself is, okay, if I'm gonna get in on the break of this level, right? How much room do I have before the next level gets here? That's one thing I would look at. Okay, I would look to say, how much room do I have here? And is that enough? That's 6 points. That's good. But let's say you're not that aggressive. You said, look, I wanted to get through here. It closes, it pulls back into the level here, and there's one opportunity at 23 ES points, and then there's an opportunity up to the next level at 23 ES points. So you had a 2.5 point loser, and you rode one for 23 points. Popped you up, took you out here at the target, came back up, pulled back into the level, and gave you an opportunity with really no heat for an additional 23 ES points, right? And then, of course, the market sells off up here at the top of this level, right? But hey, at 46 ES points minus a 3 point loser, we'll call it a 3 point loser. I'm 43 ES points on 2 lots. It's $4,300. I'm done, right? I would be done on the day. Let's keep going back. We'll go back here into one more. All right, so here is a day where the levels are a bit larger, right? But here it is, to the tick precision. And if your stop is 3 points, 2.5, 3 points, you had an opportunity for a target down here at 20, what is that, 26, right? There's an opportunity at 26. So if you have a 3 point stop, 9 points is 3 to 1, 12 points is 4 to 1, 26 points is almost 9 to 1, right? So remember what I showed you earlier today in these charts is that we have opportunities, right? We have opportunities for these bigger, higher reward to risk ratios. And I showed you how I've used that to my advantage to get through these trading combines. So here's a look at the NQ, which everybody likes to look at. And so I don't trade the NQ. All right. So I'm just going to start by telling you I don't trade the NQ. Okay. And I don't really know what the zone of influence around the NQ is, but I'm going to assume it's going to be somewhere in this neighborhood. Let me do something here real quick. I'm going to draw this back here. Okay. To this. And that's about a 12 ES point or NQ point. So I think the zone of influence on the NQ is around 20 points, right? So let's say you got in, let's say you did get in here on this pullback or maybe the break of this bar, okay? On the break of that bar because you're inside that zone of influence. Well, there's 15 points worth of stop potential there, right? But if you did get in on the break here, right? Then at this moment here, you've had well, let's draw it to this level here. You had an opportunity for 80 NQ points, or if you took it from here to this area, you had an opportunity for 30 NQ points, right? So there's an opportunity here for big reward to risk ratios. And that's what the day levels look like. Let's take a look at what the overnight levels look like. Well, the overnight levels here, right, at the Globex, holy cow, right? You talk about having some opportunity here. And again, I don't trade. I could just tell you looking at the chart here that let's say that you took this one and it took you may not, yeah, this one took you out at break even and you said, you know what, it didn't get down, it wasn't very aggressive, I'm just going to get in. Well, every level that you go to, that's 148 NQ points, right? To that level, that's 148 NQ points right there. And then if you said, we're just going to ride it and see, we're going to try to get it to the next level, well, there's an additional 110. So right now you're at 258 NQ points with the idea that you're going to reach out to that overnight structure target level, right? And so let's go back here one more time. So again, market, we could go all the way back, but let's just say the market opens up to the tick precision, no heat at all on the NQ. There is 80 NQ points, and there is 157 NQ points, and to the tick precision all the way to the third level is 237 NQ points, and all it did here was just hold here the entire day, and then you had an opportunity on the way down for 160 NQ points. Here's what I'm trying to tell you. Here's the message that I'm trying to tell you. A lot of the trading that I see goes on, again, I've done this for 10 years. People come to the equation with terrible reward to risk ratios, right? Take one off at 10 ticks, let the other one run. Take one off at 1 point, let the other one run. It's okay. I say terrible reward to risk ratios. Let me say it this way. I don't mean it like that. I just mean that if you are cutting your winning trade short and letting your losing trades run to full stops, you have to be an expert win percentage in order to be effective in the long term. To me, it's easier to be wrong a lot and only have to be right a few times with a nice reward to risk ratio than it is to try to be the pressure of being right all of the time. Because in trading, you know that's a very difficult thing to do, is to be right a super high percent of the time, right? 60%, you're really good. 70%, you're out of this world, right? But I could have a very high win percentage if I was taking a 1-tick winner with a 9-tick stop. That doesn't mean I'm going to be successful. So what I see in the people that I talk to is it revolves around reward to risk ratio, cutting your losing trades short, letting your winning trades run, right? And so what I'm showing you here is a bunch of examples of how these levels provide you structure based on market context and market information to allow you to be able to hang on to some really big opportunities, right? And so remember, this is market generated support resistance ideas that is not bound by constraints of previous highs and previous lows or all-time highs and all-time lows. They are providing you with rotations, right? And there's people out there that talk about harmonic rotations. These are not harmonic rotations, but they are in tune with what the market does, right? That's, I guess, the point that I'm trying to make here. So let me see. There's a couple more questions here. Do your levels use Murray math? No, they don't, Greg. They are just measurements based on previous price action from the markets, and is not Murray math. It is not clear to me where you get these ETH and RTH levels. Yeah, so these levels, again, are based on previous price action, right? So today, the market will rally, it will pull back, and more rally than pulling back. But those rotations will then be the foundation for the math for tomorrow's levels, right? So today's session will generate the ETH session for tomorrow night. The ETH session overnight will generate the session levels for the RTH session tomorrow, if that makes sense. And I think that's the question. So here's what I want to do. I told you there was going to be no sales pitch. All I want you to do is I want you to sign up for a free trial and come in and watch these levels. I'm going to put this here link into the. I'm going to put that link into the main chat room, and we want to just invite you in and have you watch the levels and have us watch them trade. Have you watch us trade them in front of a live audience on a day in and day out basis. We don't win every day, and I don't claim to, right? And we don't win every trade. I'm getting out quickly, and I'm holding on for bigger winners, right? So there are going to be days, heck, who knows? I may lose all 3 days that you're in there, and of course, then the fourth day you're not there, I may make it all back in 1 or 2 trades, right? That's not what's important. What I want you to see is the structural foundation points of the levels and how they work and how we are looking at them in a live market environment. So with that being said, I've kept you here right about an hour, which is what my objective was here today. I wanted to have you come in here for an hour. Raj, come in here. Come into the room tomorrow. We can talk to you about that. Like I said, I'm not looking to sales pitch you in here today. I appreciate the question. Come into the trade room tomorrow. Take a look around, and we'll go from there. So it's very affordable, Raj, by the way. It's very, very, very affordable relative to what everybody else is charging you out there, right? Our sole objective here is not necessarily to collect education fees from you, but to kind of give you some tools to kind of help you make your way through it. So again, I committed that I'm not going to be selling in here today, Raj. Go to the website, sign up for a free trial, come in tomorrow, and we can talk to you about that specifically. Let's see. Does this have to be done on Ninja charts? No. We have indicators for Sierra charts. We have an indicator for NinjaTrader 8 and NinjaTrader 7, but I teach you how to draw the levels, right? So remember, once I teach you how to draw them, it will literally take you about 30 seconds to get them drawn on your chart. So even if you don't have Ninja or Sierra and you're using Thinkorswim or Multi-Charts or some other platform to trade off of, I teach you how to draw them. Now, if you wanted to get a free version of NinjaTrader, these charts, these indicators, this NinjaTrader free version will support being able to get the level indicator on there. You would just have to get a data feed of some sort in order to do that. Now, if you went to get through a Top Step Trader Combine and you wanted to, the cost of a trading combine includes data in there as well. So you could have that in a data feed to support those levels also. Yeah, so okay, so you have Sierra charts. So I have lots of templates and things like that I use. I'm a huge fan of Sierra charts, by the way. It's very robust, and you can do just about anything you want to do with it. And so I'm a huge fan of Sierra charts, and we have them both for Sierra and NinjaTrader 7 and NinjaTrader 8. So anyway, I wanted to keep you here for about an hour today, and I've successfully done that. Do you guys have any other questions before we head out? And again, just remember, come in for the free trial. Literally, it will cost you nothing to come in and watch for a few days. It will literally cost you nothing. Come in, sit there, listen to us, see what we're doing, see what we're all about, and take advantage of that opportunity to get the trial. Well, very cool. So unless there are other questions here, I am going to release you and let you be on your way. Let me just say that I appreciate you being in here today, and certainly looking forward to seeing you guys in the free trial area. Thanks, Raj. So the trial will give me tomorrow, Friday, and Monday. That's right. Yep, absolutely. Yep. Hey, Richard, I do have some questions. I wanted to chat about some help. Yeah, Richard, send me an email to, here, I'll do it this way. I'll put it in the main chat area here. Send me an email to jason@mailotg.com. You can send me an email there, Richard. Clear as mud. Well, very good. I'm glad that, happy to help. Seriously though, if you have questions, don't hesitate to email me there. It just it doesn't give me your name, but don't hesitate to send me an email with questions. All right, very good. You guys have an awesome rest of your day, and I will see you guys, hopefully some of you, in our trade room starting tomorrow. So take care, guys. Thanks for your time today, and I'll see you on the other side.